And right now we're in a world where, Jito Sol was and other liquid staking tokens are primarily only available to you if you can trade on chain.
Mm-hmm.
And so a lot of what my job is actually how do we put this product that has, a base historical yield of 7 to 8%, how do we put it in the hands of people who can't actually trade on chain today?
I see. Welcome back to the Bitcoin.com live stream. This is Frederick. I've got my co-host, David.
Sir.
And we've got a guest here, Thomas Ng. And Thomas is the Chief Commercial Officer at the Jito Foundation.
Yep. That's right.
And as some of you may know, Jito is a Solana protocol for liquid staking. Thomas, welcome to the podcast.
Thank you. It's a pleasure to be here. I appreciate your guys' work today. Must have been a big day.
Yeah. It's been
fun.
A busy day. I'm sure busy for you as well. I know you've been participating in at least one panel, maybe two. I don't know.
Yeah. We are fortunate in that people care enough about what we're doing. They want to learn more about it.
Yeah. Well, liquid staking. Yeah. I guess, case in point, liquid staking is one of those interesting, use cases for tokens, because it's literally like a derivative, right? Like in the TradFi sense. And you've worked in TradFi. Maybe you can go into your TradFi background, which I found very interesting, and then how you transition from that into crypto. We can start with that, I guess.
Yeah, sure. So I started. I used to work at Jane Street. I was there for 22 years. I moved all over the firm, traded equities, commodities, FX, volatility. And in 2017, I was part of the team that started looking at crypto. It was a novel asset at the time. We really ramped up our activity going into kind of Q4 of 2023, particularly when the CME and SIBO announced the futures launch.
Right.
We realized that we couldn't actually support the futures if we couldn't hedge in the underlying. And so then we became active in spot, and then we built up a pretty substantial business across all business lines, including DeFi. But then in Q2 of 23, there was a lot of regulatory enforcement from the U.S. And so a lot of the U.S. firms like Jane Street had to kind of rescale or resize the business. And so we took a bit of a step back. We kind of focused on the assets and the products that we were comfortably regulatorily compliant at the time, as Jane Street is a kind of very compliant firm. And then,
sorry, what assets at that time did you scale back to? I'm just curious.
So at the time, in early 23, like the proof of work coins were very clearly those were digital commodities. And we also were trading ETH because there was enough decentralization in their product to believe, with some high level of confidence that it was more of a commodity than security. And then I spent my last 18 months at Jane helping us build out our exotic options business in EMEA and APAC. So I went from working with crypto people to negotiating ISDAs with banks and trying to get structured products issuers to lay off risk with us. And so towards the end of last year, I decided that I really, really wanted to come back into the space. And so I left Jane at the beginning of the year. My plan was actually to just chill out and take some time off. And that
Good job at
really
that.
work well. I got connected to Jito very early in the year, like maybe late January. And they came to me with this project. They wanted to talk about how liquid staking might fit within an ETF. And given my background and given my kind of interest, I agreed to kind of just help them out informally for a couple of hours a week. But one thing led to another. The more I got to meet the team, the more kind of attractive the proposition became. And so I joined full-time in April.
They probably knew what they were doing.
The Jito team...
Just call a couple hours.
Yeah. No, I mean... These guys were incredible. They are incredible to work with. And the Jito team is really cracked. Like the talent density at Jito is, and I say this coming from Jane Street where but the talent density at Jito is really phenomenal, especially given the breadth of the activities. Lucas and Zano, the founders, are more on the engineering side. Brian Smith, who runs the foundation, is incredible at what he does. Rebecca Reddig, who's our chief legal officer, is like the best lawyer in crypto. And so I'm just trying to keep up and do my part.
Humble.
Yeah, very interesting.
Can I ask one follow-up question?
Yeah.
Sorry. You said you started looking into assets of Jane Street in 2017.
Yeah, that's right.
During those giant market downturns in like 18 and then in like 22, did Jane Street or did you have like pause and like, what are we doing? Why are we in this? Or was it more like, oh, well, this is just like an incredibly volatile thing?
Yeah, I mean, trading firms, P&L tends to scale with volatility. And so volatility is not something that scares trading firms off.
Okay.
So
nice.
Once you have the infrastructure in place, then it's just a question of managing risk. And so certainly there are times when you have to be very cognizant of, the riskiness of your positions and how expensive, the capital charges are. A lot of crypto was and still remains somewhat, capital inefficient compared to traditional finance because there is a lot of pre-funding that's required. Credit was, depending on what part of the cycle you're in, credit can be hard to kind of get access to. So, yeah, I would say that if we were going to build in the bear, it might have put us off. But given that we had built, going into the CME and SIBO futures launch, given that we had the infrastructure in place. And I think you'll find that from a lot of a lot of the traditional financial people. The big thing about institutions is that their timescales are just very, very, very different than crypto. And so you had a lot of people who were curious, like some banks and asset managers and, investment advisors, investment firms. But because of the cyclical nature, they might have started work in 2017, but they were still continuing to work in 2018, and the downturn might have, dissuaded them from kind of continuing to build out.
But it didn't for you guys.
It did not for us.
And I think that's actually a good segue into what Jane Street does. And we'll talk, of course, Jito is like the main thing. But for people who don't know, Jane Street is like a prop trading firm. So maybe you can talk about what prop trading firms do and why they were so well suited to the volatility that you mentioned that we see in crypto, especially in the 2017 days when volatility was much higher than it is now with institutional buyers coming in. So maybe you can quickly just go over that.
Sure. So prop trading firms used to be harder to describe. I think they're much more common now. But prop stands for proprietary, which means that you are a trading firm that trades with your own capital. So as opposed to like a hedge fund where you kind of raise external money and then you kind of deploy them into strategies, prop trading firms, you're trading the firm's capital. And what was the second part of the question?
Well, I was going to say how that fits into the fact that you guys adopted crypto in 2017 and you had, like you said, four assets already that you were dealing with, and it's your expertise dealing with volatility.
Yeah, I mean, so if you think about the job of prop trading firms, or at least the way that Jane Street thinks about their job, is to assist in the formation of fair, orderly, and efficient markets. And so essentially the idea is that prop trading firms, if you do your job well, you come into inefficient markets and you essentially get compensated for making markets more efficient.
Yeah.
And given the amount of inefficiency in crypto markets at the time, there are different levels of it. Some of it is kind of lower hanging fruit. Some of it is kind of more structural and it requires a lot of investment in order to kind of help reduce some of the frictions. But, given the amount of inefficiency in crypto markets at the time, I think that there was a very important role for firms like Jane Street to play in helping make the markets more efficient. And I think we're seeing the benefits of that today.
Yeah, and Jane Street is like a really big firm that's well respected as well in New York, and that also kind of segues well into what Jito is and what it does. Liquid staking. Can you explain to, I guess, maybe a novice what liquid staking is essentially?
Sure. Well, let me just take a step back, if you don't mind. So Jito has three primary products or three primary verticals. The first is Jito is a core Solana infrastructure provider. It is the primary way that users can incentivize transactions to land on Solana. So it accounts for over half of Solana's REV. So people, if you want to mint a meme coin or mint an NFT, or you have a transaction bundle that you don't want disintermediated, you can add a Jito tip on top, and it kind of moves into kind of a preferred block space auction type system. And so it makes it more likely that users can get transactions to land, which in times of like network busyness is very, very valuable. Jito takes the tips and distributes it back to validators who return it to stakers. And that's part of the reason why Solana yields are where they are. And like just for context, over the course of 2025, Jito will have returned in excess of 1.2, 1.3 billion to validators over the course of the year. So that's the core Solana infrastructure piece. We've also built out a new product called BAM, the Block Assembly Marketplace, which is a new way to get Solana app builders to control their own sequencing instead of having it all kind of fall to the validators. There's another vertical, which is restaking. It's like the Solana version of Eigenlayer. And then the third vertical, as you mentioned, is liquid staking, which is the part that I spend most of my time on. Now, the liquid staking is there's a lot of kind of complexity to it, and it might throw people off. But I think the simplest way to think about it is it's just a token that represents Solana that has been staked, plus the rewards that token is due. And so I think there's a lot of different ways that you can try and describe it. The way that I've been testing out is, so my mom is retired, and she asks me what she should do with the money, and she tends to park it in a CD, so a certificate of deposit.
Very safe.
So,
very safe.
Very safe.
Low yield.
She is, as we say, risk averse. Yeah. But essentially what happens is, banks have this fundamental problem where they borrow short and lend long. And so the CD is a way of like essentially saying, oh, if you lock up your money for a longer period of time, we'll kind of increase the rewards. But what ends up happening is if you need access to that money during like the 9 or 12 months where it's locked up, like you either can't get access to it or you have to give up all of the interest that you've received. Now, liquid staking token is in a similar way, like you have Solana and you have staked it, but if you need access to liquidity, if you need access to cash, the liquid staking token is actually a way that allows you to trade the entitlement and the stake that's completely separate from like the underlying stake itself. And so it allows people, if you need money or if you need access to capital, or if you want to, provide collateral to, your trading platform, this is a liquid staking tokens are a way that allows you to do that without having to deal with the, unlocking or paying the penalties for releasing that capital early.
Interesting. So I'm actually, I actually thought Jito was mostly just liquid staking, but looks like
that means I'm doing a good job.
Yeah, you do more than that. The question I was going to ask you was why you chose to do liquid staking on Solana versus a platform like Ethereum. Of course, you did mention that you do much more than liquid staking, which is why maybe you guys do build on Solana. But I'll still ask the question. Solana is like a meme coin. That's what it's known as. It can certainly do many other things, but where it got its claim to fame, where it became really successful rather, is meme coins. So what made you guys want to build that protocol on Solana versus anywhere else?
Yeah, so I think meme coins, I think that's fair because it is, that is the way that people have seen it. But the way that I would view it is if you have a product that requires high transactions and low costs, in this case, memes, like Solana is a very good place for that. And it is evidence that, if you need to set up wallet infrastructure, if you want to fund your account with small amounts and you want access to all of the services that are being built on Solana, it's very, very easy and straightforward to do that. And, that has been part of the commitment from Jito since the very beginning. Jito is a Solana protocol. And so the Jito's, the liquid staking token was kind of born maybe a year and a half ago, which predates my start there. But it's essentially, when you are providing this sort of infrastructure that Jito is providing to Solana, one way to think about, crypto companies are kind of very incentivized to find ways to leverage their product in order to make things easier for users. And that's essentially what, like, as with a lot of other protocols, like Jito went out and kind of discussed with people, like, what are the pain points for you guys? And, the access to stake Solana, the ability to use it in ways that like were restricted before, kind of led to the decision to go down with the liquid staking route. And, we're fortunate that the product has been successful enough that it's now like the largest liquid staking token on Solana by every metric. And we're making a lot of headway on the traditional institutional side to make sure that it is as easy as possible for, even the most conservative traditional institutions to adopt Jito Sol as their staking solution.
How, so your main focus is on the liquid staking side. Now I understand your background, which is quite impressive. I don't understand. Please educate me on how your expertise in that domain is really, really helpful and useful for liquid staking. Because from my, I don't know, noob, mid IQ brain, liquid staking is, I mean, it's great. I love liquid staking, but seems quite simple. And you just were doing exotic options. That seems like a wildly more complicated thing. And so I don't understand how those two things kind of work well together.
No, I appreciate that question. And, I do hope we get to the point where people look at liquid staking token as just a very simple product, because it fundamentally is. And they just can use the liquid staking to meet whatever their investment or their financial objectives are without thinking about it too much. But the way that I kind of view my job, it's to provide access to Jito Sol to anyone and everybody. And right now we're in a world where, Jito Sol was and other liquid staking tokens are primarily only available to you if you can trade on chain. Mm-hmm. And so a lot of what my job is actually, how do we put this product that has, a base historical yield of 7 to 8%, how do we put it in the hands of people who can't actually trade on chain today?
I see.
And so the ETFs are a big part of it. And the ETFs, the DATs are a big part of it. Yeah, no, for sure. Like, we're in Asia, and so there's certain products that are very popular here that are maybe less familiar in the US, but things like structured products and insurance notes and things like that. And so I think that we're taking Jito Sol. We're basically saying Jito Sol is a way for you to extend the utility of Solana that you already own and allow you to do more with it, depending on whatever it is that you need or however it is you trade. Because there's lots of people who can only access crypto via a brokerage account. Or if you're an institution trading firm, you need a prime broker to provide funding. And so what products can you access? And can we get you to, getting an exposure to Jito Sol using those sorts of products?
So sorry, one last follow-up question on this. Does it not to like compliment you overly, but it seems like is it challenging for you? Because it doesn't like from what you're doing previously to I don't know. Sorry.
Well, I appreciate the fact that you guys are relying on my CV to think that I'm smarter than I am.
Okay.
Like, I very well could have been like the dumbest trader, James.
Okay.
And so
I don't think Jane Street would have hired you if that was the case, but
Jane Street was much smaller than at the time. They probably have less options at the time.
The answer is probably I'm not understanding how difficult.
No. There is a lot of complexity to these types of structures.
Okay.
Like, it is hard to package assets into ETFs. It is hard to package assets into structured products. There is a lot of friction there. And a lot of that friction actually comes from well-meaning regulation and protection. Like, how do we make sure that, retail doesn't invest in products that are too risky for their particular needs? And so if you want to put something into an ETF, you have to adhere to a lot of standards that have been built out over the years by either the SEC or the exchanges, or a lot the custodians, index providers, the authorized participants. And so there's a whole host of people that you need to get on side before you can even talk to an issuer about getting it in the ETF.
I get it.
So there's a lot of kind of behind the scenes work. But
you probably have to like profile it and show like some kind of risk measurements and things like that.
Yeah, like if you've ever looked through risk disclosures for an ETF,
okay, now I get
it. It's like, how do you answer these questions about like, can people access their funds when they need it?
Right. So basically, just your experience with exotic products and dealing with institutional firms, you're able to, because when you package these, like a liquid staking token into an ETF or something like that, that means it has to be at least as risk managed as the ETF itself for it to be part of that, right?
Right.
That standard.
And in addition to like all of the stuff that's happening kind of in the middle and the back of it, there's also like in terms of the front end of it, like just because an ETF exists doesn't mean that people will flock to it. There's so many ETFs now. Like how do you actually raise? I mean, yeah, we're going to see many, many, many more of them coming up in the next few years. But, so in order to actually get an ETF issuer to do the work, to do the filings, like you have to demonstrate there's actually some demand. And so a lot of what we've done is like talking to hedge funds or talking to pod shops or talking to these like prop trading firms and saying, if this product existed and it had these benefits, would you use it? And then you have to so there's a bit of a flywheel that has there has to be a case that's built kind of across the entire spectrum. And so these things just take time.
Very cool that Jito is, I would say, forward thinking in this and making that effort, moving outside of crypto to really kind of reach across the aisle, if you will.
Well, we are fortunate in that the services that we provide have been deemed valuable, and Jito does not need to worry about kind of keeping the lights on. And once you shift your focus from how do you build a business that allows me to kind of earn and survive in the short term, then you do start to figure out, okay, well, what is the medium and long-term plan for this? And we have decided that the long-term bull case for Jito is just the growth and expansion of Solana. So it makes way more sense for us to kind of boost the ability for users to recognize the value of holding Solana. Because if they're not holding Solana, they're not going to mint Jito Sol. They're not going to buy Jito Sol. And so there's a lot of work that we need to do in order to actually build what is the investment thesis for Solana. And so we're trying to let people know that, whatever economic activity that you want to engage in or that you're trying to engage in, you can do it with less friction. You can do it more effectively, more efficiently. You can using crypto. And Solana is a great place for a lot of these products to list.
Cool. Now let's talk about Jito Sol, which is it's a little bit different from is it a competitor? Lido? Is Lido a competitor or cousin? I don't know. I don't know what to call it. It's sort of not the same organization, but
Lido gets all sorts of flowers because they're the ones. Them and Rockapool are the ones who kind of innovated the most in the liquid staking token space 4 years ago. So all respect to those guys. Yeah.
And so I mean, a lot of people are familiar with Lido. Your token is different from Lido. It's an MEV LST. Can you explain the difference between a Lido and a Jito Sol, and what makes Jito so special? What's the special sauce?
So there is a question that comes up a lot, where does the yield in Solana actually come from? Because when you talk to institutions like retail, they look for the highest number that they can get, but institutions are very cognizant of risk, and they're not shy of asking this looks too good to be true. Where is this yield coming from? Is it sustainable? Is it scalable? cetera. And so the yield on Solana comes from a combination of a few things. The first is there's some native emissions rate, like there's a native inflation rate in Solana. And so validators, just by doing their job, the leaders by doing their job, are compensated in newly minted Solana. The inflation rate for Solana right now is about 4.5%, but it's designed to decrease every year by 15%. The other component of yield is, as I mentioned, Jito tips is a big component of that. And there's also a priority fee component. So essentially, it's a combination of native emissions plus network activity. Like you talked about it as MEV, we think about it more as like what users are willing to pay in order to make the system more deterministic. Like, how do we make sure that in the universe of all of the transactions that are being put or attempted on the blockchain at this moment, how do we get our transaction like higher up the queue? And so, those sorts of fees should scale with network activity. And so as the network becomes more busy, which we expect, then you should see the yield increase. There are some structural differences, like Lido is on Ethereum and Jito Sol is on Solana. And there are some differences, like Lido Steth is considered like a rebasing token, which means that as yield is paid out, you get more Steth in your account. Whereas Jito Sol is what we call a total return token, which means that all yield accrues within the contract itself. And so the easiest way to think about that is like on inception, you could have minted one Jito Sol with one Sol. But right now, one Jito Sol contains maybe 1.25 Sol, because it's 2 years of growth in the product. And so you have, like in Steth, you start the year with 1 Steth and then you end the year with 1.03 Steth. With Jito Sol, you start the year with 1 Jito Sol, you end the year with 1 Jito Sol. But if you were to burn the Jito Sol at the end of the year, you would get more Solana back than if you had burned it at the beginning of the year.
How does that make it? Seems like it's kind of the same thing, but yeah, because you're earning the extra ETH here, but you're earning the extra Sol in the Jito Sol.
Yeah.
Does that make a difference? Is that an important difference?
Well, I think so. And, we'll have to see kind of what actually happens with some of these questions. But for instance, the tax implications of staking are still not entirely clear. Yeah. And so our viewpoint, and we've posted this on our website, there was a report from Fenwick, is essentially that staking rewards should be treated as newly created property. And newly created property is not taxed until disposition or sale. And so it's not taxed as income. And if you have a total return token, then it looks like it's just accruing within the contract and you don't get taxed until it's sold. If you have a situation where like its number go up in your account, like you started with 100 Steth and now you have 102 Steth, that starts to look a little bit like a distribution that might be a taxable event. And so we're not sure, like there's still lots of work that needs to be done on this, but that's an example of something where, the rebasing versus the total return might play a factor.
Really, really smart. Yeah, I like that. I like that. Yeah, just in case something happens, like from a regulatory perspective, that would be like a useful feature, right?
Yeah.
Wow.
But I admit that it might be more confusing for users to know what the actual yield is because it's inside the contract itself. Like if you start with 100 Steth and you have 103 Steth at the end of the year, you're like, oh, okay, I know exactly. Yeah. Oh, yeah. So, there are trade-offs and everybody makes trade-off design decisions. And
yeah, I was looking at your website. I saw you talked about the tips. There's a tip route and there's an automated staking pool. Can you go over some of these? I think you call them non-consensus nodes. Is that what you call them? Yeah, what are those and what do they do? And just some background about them. I didn't have time to dig into it, but it looked interesting.
Yeah. So I'm going to have to reveal my ignorance now. So the products that you're talking about fall under this kind of second vertical of restaking. And I'm not familiar enough with the product to be able to describe it well.
Okay.
I mean, I think it is just like liquid staking, but you're using an asset other than Solana. But the important thing, I think, to point out is that the first node consensus, first NCN that was built was something called tip router. And what tip router does is it takes a series, like you have this issue with staking, where you have to determine how to manage the payments that are coming in. How do you manage the Solana that's coming in? And a lot of people do it in an off-chain way. Like you do some sort of reconciliation with the staking provider. You have to kind of compare like what your entitlement is to what you're expected and all this other stuff. And there's a lot of human intervention that needs to take place before the rewards are actually paid out. Okay. And so what tip router does is it actually makes it much more, makes it automatic so that there's more transparency around the contents of the liquid staking token itself. And so, a lot of what we're trying to do is geared around how do we make this as transparent as possible? And how do we decentralize this in a way that reduces the reliance on humans at Jito to do the work to give you the entitlements that you need? Because, one thing that people are very kind of conscious about, and another kind of structural difference between Jito and Lido is that there's like an investment committee at Lido who makes the determination about where they delegate the stake. Anytime that new ETH comes in to be staked, somebody has to kind of manage it. But from what Jito does is they've built this program called StakeNet, which whenever stake comes in, it automatically distributes it via smart contract to a universe of 200 validators. And we're soon going to expand it to 400 validators, which means that there's no lag between figuring out who we should distribute it to. And the other thing about StakeNet is that the way that it determines which validators get the stake is by scoring, historical scoring, we look at all of validators over the last couple of years.
Yeah, nice.
And there's also a bunch of different metrics, like how much are you passing through to stakers and your vote counts, and have you been performing well? And so because of this kind of decentralization effect, we think that, it makes it such that as Jito Sol grows, it actually decentralizes the network as opposed to centralizes it. It doesn't concentrate power in Jito. It actually empowers the entire network and makes the network more performant, more decentralized, more secure.
Wow. Yeah, that's I want to buy some Jito. So now that you're explaining all of these things, I'm like, okay, I need some of that yield.
We gotta wrap it up soon, dude.
Yeah. So what's the next big innovation? I know you just had a talk with Lido, and you guys were talking about the new waves in liquid staking. What are some of the big things we can look forward to in that ecosystem?
So the thing that I'm working on now that's kind of the most relevant is the ETFs. So we expect that there will be there is an ETF in the US that provides staked Solana. The ticker is SSK, and it's the issuer's REX shares.
Yeah, that's right.
We work well with them, and Jito Sol is a constituent in SSK. There are 9 current filings for Solana ETFs. They all include provisions on staking, and we believe that these will be approved for listing in the U.S. by early to mid-October. So maybe in the next 3 weeks.
Wow. That's
it's coming up.
Yeah. 3 of the 9 filings have included language around liquid staking. We expect that number to actually increase. And Van Eck has also filed on August 22nd for a Jito Sol ETF. So the only thing that it holds is Jito Sol.
Wow.
And so we're very, very excited about the ETF story. We also think that once the ETFs list, there will be more people who are able to access Jito Sol than are available to do that today, particularly if you are a regulated company that you can only hold regulated assets, or you don't want to set up wallet infrastructure, and so you can just express your opinion via the ETF instead of having to kind of go and do on-chain activity. Also, when the ETFs list, like we expect options on the ETF to list shortly thereafter, and that opens up all kinds of cool stuff.
His old job.
So this is where
I got you.
This is where it gets fun. It's like after the new.
Oh my God!
It's like there's a lot of flexibility. So particularly when it comes to the DATs and some of the hedge funds and the multi-manager pods and people like that. So we are gearing up for a big fourth quarter.
Yeah, I can imagine you personally are going to start to be pretty busy.
I don't know how I can get busy.
Of course.
But I hope so. I hope so. That will mean that things are going well.
Yeah, and just going off of that, you're the TradFi guy. What's Sol going to be like at the end of the? If you were a trader,
if I was a trader, I would avoid this question entirely. Yes, not financial advice. Do your own research.
Yeah.
I mean, Jane Street is like a markets-based company, and so it's not like a fundamental or technical analysis house. And so my background is all in kind of like markets-based signals, and they tend to be shorter time horizon trades. So I don't feel super well qualified to answer that question.
Okay.
But it will either be unchanged, up or down. Would be my guess.
Yeah. All right. Anything else that you might want to tell our viewers, like where they can find, where can I buy Jito Sol? I want to get some now that I've talked to you. Where do people find the Jito Foundation, or if they want to get in contact with you?
Yeah, thank you very much. So our website is jito.network. Jito Sol is the most liquid staking token on any of the decentralized exchanges. In terms of centralized exchanges, we're listed on OKX, Coinbase, Kraken, Gemini, and Bullish. I am available. My Twitter handle is Thomas
It'll be here when we release.
Oh, great. That's good. I don't have to spell my name for people. And please, DM me, reach out to me, comment on my tweets. Let me know that you're watching, and if anyone has any questions, I'd love to engage.
Well, there you have it, folks. Thomas he is the Chief Commercial Officer at the Jito Foundation. Thomas, thank you for being with us today.
Thank you, man.
It's a pleasure. Thank you.
And thank you for watching, guys.